Hello everybody, welcome back to the channel. If you've ever been interested in learning about how to read a chart, the first thing you gotta learn is what a candlestick is and how to read a candlestick chart. And so that's what this video is going to be introducing you to do. At the end of this video, you should be able to look at a candle chart and immediately know what happened with the price action during that time period. So let's go ahead and jump right into this. Alright, so this is what a candle looks like. There's one big thick part called the body. This is either going to be green or red, depending on what the price did during this time frame. And then the upper and the bottom wicks, which are sometimes called shadows. So this is what it looks like. If it's green, it means that the stock went up. If it's red, it means that the stock went down during whatever time frame you're looking at. Alright, so how are these candles made? That's where you're going to learn the most about this. So we're going to assume that you're looking at the 1 minute time frame. You can choose whatever time frame you want, but I'm just going to assume this is 1 minute for this example. At the start of that minute, whatever the price point is, that's where this line is going to be generated. It's just the price of the stock at open for that time frame. Then what happens is, during this 1 minute period, it'll track whatever the price is during that minute, and it'll graph this line. So maybe at open here, it went down, and this would be the low, so this is the bottom of the wick. So you know this is where the stock went, but it obviously went up over the rest of the minute. So it went up all the way up to the high here. This is where this wick comes from. And then what determines the other part of the body is the close price. So the close at the end of that minute, and that's where that line is. So that's how, this is why this is all big, thick, and green, and these are just the wicks up here. So the difference between the open and the close during that minute is where your body's going to be. Above that is just the highest point it was during that minute. Down here is just the lowest point that it was during that minute. And then it's the same thing but reverse. If the candle was to open up high and then close lower, and then it would be a red candle instead of a green one. So if it opened high and went lower during that minute, that's when you get the red one. Whereas if it opened low and closed at a higher point, that's where you get the green. I think a better way to maybe show this might be in Google Drawings. Let me switch to Google Drawing real quick. Alright, so I'm going to go in here and make a little body for us to play with here, and we're going to assume it's going to be a green candlestick. So during this time interval, it'll just be a black line to begin with, and then as soon as the price action starts, this will track. So if the price goes up, your candle's going to get bigger and nice, you know, it'll expand as the price goes up. Once the price starts going down, that's when you get your black candlestick here. And I'm just going to throw this up here going through the stick, or through the entire picture here. But that's where you get that top line at. So whatever the highest point was, that's where your candle is going to be. Now during this minute, the price might continue to drop, and maybe it goes down here. Once it goes below the open price here, it'll turn into a red candle, and it'll stay red unless it gets above this open price here. So here's going down. Let's pretend it goes back up a little bit. That's where you get the other side of the candle. So it's whatever that low point was. And then maybe this candle shoots back up and finishes green. And that's how this candle would have been made. Alright, so that's great. So now we know how these candles are made, but what do they actually tell us? Well, when you're reading these, it'll tell you, it'll help you predict where the buying pressure is or the selling pressure is. In this example, a big, thick green body means that the buyers were strong. They really pushed this price up. It closed a lot higher than it was at open. At the top here, you can see it went up a little bit and came back down, so that's why there's a little candle here. Or, sorry, a little wick at the top here. And this would be considered a weak price rejection, because the sellers were not able to push it back down to the close or turn the candle red. So this would be like a little bullish candle here. Whereas on the opposite side, even though this is green, this might be a bearish candle for you, because you can see the buyers took it all the way up to this high price, but the seller said, nuh-uh, and they pushed it right back down. So this was a strong rejection. This might not be a bullish candle. In fact, this would kind of tell me that we don't know what's going to happen in the next candle, because the sellers have won this battle. They might win the next one. Alright, so for red candles, it's the same thing but opposite. So a long, thick red body here. This tells you that there's strong selling pressure. The sellers were in control. If there's a small wick at the bottom, that means there was a price rejection at a certain level here, but it's weak because it's a small amount that was recovered from the all-time low during this minute. So this might be a strong bearish candle for you. Whereas this one, even though it's red, it shows a strong price rejection because the buyers are able to push it from the lowest point in the minute all the way back up to almost the price it was at open. So the size of the wicks matter when you're trying to read these charts as much or even more so than the actual color of the body themselves. There's another thing that some traders look at, and this is a pattern that they look for, is called an engulfing candle. It's when the next candle in the series is larger than the other candle and even changes directions is what they try to look for. So you can see the wicks from these guys is bigger than this one. So this is called an engulfing candle. And this is like a interesting point in time that some traders use to make decisions off of. And some of them will enter and exit trades based on looking at these patterns. So here we have a bearish signal. There's a lot of selling pressure immediately after the green here, so they'll go short here. Whereas over here, if there's a big green engulfing candle, they might go long on the stock at this point. Let's go ahead and pull up Thinkorswim, and we're going to look at the QQQ and see if we can see how these engulfing patterns dictate how we trade if we were using this as the only metric. Now, I wouldn't suggest using just one metric to make your trades, but for this example, because we're only looking at candles, let's just see how that plays out.
If you're liking this content, go ahead and click like, subscribe, and turn on notifications so you can stay up to date on.
All right, so here we got QQQ. We're looking at the 1 year, 1 day time frame. I'm just going to zoom in here for a little bit. And you can look at these candlesticks, you know exactly what happened on that day. So let's look at 7/16, for example. We can see that it opened up at 361 because on the red candle, we know the top of the body is the open price. We know it closed at 357.57 because that's the bottom of the body. The all-time low of the day was just below that, and we also see the all-time high. Now, if we go to the next day, we can see it opened up even lower because I guess there was a gap after markets or whatever. It's a Monday now. So here we see it opened up at 354. It went all the way down to 351.94 because that's the bottom of the wick. But it closed above the open price because it's a green candle, so we know this is where it closed. And at some point, it was above that price even and came back down. So that's how you read these candles, and it gives you so much information on that day if you're looking at the daily. Now, if I move to the 1 day, 1 minute chart, because we wanted to look at the engulfing theory, I'm going to zoom in here. And what we're looking for are spots where the candle engulfs the previous candle but changes colors. So here we have a red candle that's engulfed by a green candle. So maybe we get in here, and then we're looking for a spot where a red candle engulfs a green one, which would be here. So maybe that's where we would exit if we were trading based off of just engulfing candles. We got a small profit there, not much. But let's look. Here's another green engulfing candle. We don't have a red engulfing candle here. Here's another green one. So if we weren't in, maybe we buy in here. So just put a little point there. And we're looking for a spot where the red candle engulfs a green candle. And looks like we don't actually have that for a while. Here we have 5 red candles. If you combine those, that does engulf this guy. So maybe we exit at this point. So that would have been a nice little 367, 368. That's a $1 move. So if you bought 100 shares, you just made $100 on that off that move. And then again, we're looking for a spot where a green candle engulfs the red candle. Looks like we got one here. So maybe we buy in. Takes a while. We went down. We go back up. Here we're engulfing, but we're still at break even, so maybe we hold it here. And eventually we get up here. This might be a decent point. It's not quite an engulfing candle, but it's a very strong red candle here, so maybe this is where we exit. And we made a little profit off of that guy. And again, we're looking for another spot where we have a bear or a bullish engulfing candle. See if we see another one on this day. Alright, looks like we have one right here. So this green candle engulfs the red one, so we buy in. Maybe our price point's here. And now we're just looking for a red engulfing candle that annihilates us. And right here is where we have a red one engulfs the green candle. So we'll exit. Hopefully we get out here. And again, another profit using just the candlesticks. Now, I would not just trade off engulfing candles alone. Like you'd be looking at resistance levels, trend levels, that kind of stuff. But this is just showing you the power of like looking for patterns in just the candlesticks alone. And so we're still looking for another green engulfing candle here. This was close, but not quite. Here's one. This green candle engulfs the red one, so we buy in. Maybe we get in on this candle here. And then we're just looking for a red candle that engulfs our green one. And if we look, this guy I think counts as that. So we'll probably be able to sell at the next candle here. And again, here's another huge gain, 68 to 57. So you make 57 bucks if you only bought 100 shares, but you can just see like this is a pattern that just seems to work. And I think I got my point across, like how important it is to be able to read candlesticks. If you have any questions, post a comment below and I'll see if I can respond to them. And remember, I'm not a financial advisor. Any decisions you make are yours and yours alone. If you like this kind of content and want to see more with graphs and charts, leave a comment, let me know, and then I'll make more videos about this. Maybe do resistances next. And until next week, happy trading, guys.